Welcome to Groot Analytics, where we will be walking you through the analyses of Equity Residential and Newmark Group conducted by our team of investors. Thank you for joining the Groot Analytics team while we review the findings from our research. My name is Mar, and this analysis was conducted by myself, John Hasek, Jolie Humphreys, and Alania Somos. This presentation will take us step-by-step through the industry and company overviews, financial analyses, SWOT analyses, conclusions, recommendations, and an appendix of the sources that were used to compile our data research and conclude our recommendation for the investment team.
Hello, this is John Hasek, and I will be presenting an industry and company overview of our businesses of interest. The first business that we will be looking at is Equity Residential. Equity Residential is a real estate investment trust that owns, develops, and operates apartment properties. The key drivers in this industry are occupancy rates, effective rents, property taxes, capital expenditures, leverage rate, and leverage ratios. Some of the primary considerations for industry investment include real estate investment trust metrics, net asset value, dividend yield, and capitalization rates. The second business that we will be looking at is Newmark Group, Inc. Newmark Group is an advisor and provider of commercial real estate brokerage and global corporate services. The key drivers in this industry are transaction volumes, headcount, productivity, fee rates, and cost discipline. Some of the primary considerations for industry investment include working capital fluctuations and operating leverage through business cycles.
Hi, my name is Jolie Humphreys, and I'll be discussing the key findings of our industry and providing a company overview. We have learned that Equity Residential is a United States multifamily real estate investment trust that is focused on high-barrier coastal markets. We have also learned that Newmark Group is a global, fee-based commercial real estate advisory and services firm. Although these two businesses have different business models, they operate within similar industries, and we will need to interpret their performance indicators accordingly.
Hello, this is Alania Somos. I will be presenting the revenue streams and segment performance information for Equity Residential and Newmark Group, as well as discussing our investment analysis, teams observations, and conclusions regarding these financials. This slide contains two tables that display the revenue streams and segment performance information for Equity Residential and Newmark Group. The values that we have included are the components that comprise the revenues for each of our businesses and interest. We have also included year-on-year change statistics to help us with our evaluations, comparisons, and determinations. In terms of its revenue streams and segment performance, Equity Residential revenue is primarily driven by strong demand and limited new supply. They are facing pressures from rising real estate taxes, insurance, and utilities. Despite inflation, returns have steadily improved year over year, and operations remain stable, supported by efficient property management. Their focus is sustainable, energy-efficient buildings and green certificates. This helps control long-term operating costs and boost portfolio value. Now, in terms of revenue streams and segment performance for Newmark Group, growth is led by expanding management services and new client relationships. In 2024, revenues rebounded after a downturn in 2023. This is a reflection of a more stable market. Also, rate reductions help stabilize leasing activity. Reoccurring management fees continuing to strengthen their revenue mix and predictability. Advisory and brokerage segments remain cyclical, fluctuating with broader economic trends.
Hello, this is Mar again, and I will be presenting the profitability and margins information for Equity Residential and Newmark Group, as well as discussing our investment analysis team's observations and conclusions regarding these financials. The slide contains two tables that display the profitability and margins information for Equity Residential and Newmark Group. The values that we have included are the key components of the business operations for each of our businesses of interest. In addition to year-on-year change statistics, we have included yearly operating margins, operating expense ratios, interest coverage ratios, net profit margins, and fully diluted earnings per share information to help us with our evaluations, comparisons, and determinations. In terms of profitability and margins, Equity Residential exhibited optimization throughout their portfolio. Following their fiscal year of 2024, Equity Residential had reduced their debt-to-income ratio as well as the residential delinquencies following the COVID-19 pandemic. Their overall debt is approximated at 2% in comparison with their rental revenue, showing significant stability from an industry standpoint. While there are future instances that may jeopardize their overall health within the market, their strategy remains consistent and shows future growth within their company. In terms of the profitability and margins for Newmark Group, they exhibited a much lower level of stability and consistency, with their operating leverage showing an up and down year-on-year transaction volume. While their margins have stabilized around 6%, their profitability still remains below its 2022 peak.
Hi, this is John again, and I will be presenting the balance sheet overview information for Equity Residential and Newmark Group, as well as discussing our investment analysis team's observations and conclusions regarding these financials. This slide contains two tables that display the balance sheet overview information for Equity Residential and Newmark Group. The values that we have included are essential to understanding the financial condition of each of our businesses of interest. In addition to year-on-year change statistics, we have included yearly quick ratios, current ratios, debt to assets ratios, and equity ratios to help us with our evaluations, comparisons, and determinations. In terms of its balance sheet, at the end of 2024, Equity Residential's readily available liquidity was around $2 billion, with debts limited near-term maturities. Equity Residential's balance sheet is viewed as strong and flexible due to the leverage used and showed good recovery following the COVID-19 pandemic. In terms of its balance sheet, Newmark Group's asset growth shows an expansion of loan servicing originations, which provides differentiation. Newmark's cash and cash equivalents have slightly improved year to year, but are still below pre-2023 levels, and they maintain higher leverage due to 7.5% of senior notes and credit facility borrowings. Equity has declined slightly from share repurchases and partner distributions.
Hello, Jolie again, and I'll be presenting the cash flow summary information for Equity Residential and Newmark Group, as well as discussing our investment analysis team's observations and conclusions regarding these financials. This slide contains two tables that display the cash flow summary information for Equity Residential and Newmark Group. The values that we have included are the key components of the financial activities for each of our businesses of interest. We have also included year-on-year change statistics to help us with our evaluations, comparisons, and determinations. In terms of its cash flow, Equity Residential has shown to have a consistent cash inflow that is supportive of dividends and capital expenditures. Also, their rent collection and renewal activity has shown to improve year to year. And lastly, their operation costs rose slightly in 2022 due to utility and insurance increases, but other expenses were controlled to offset this increase. In terms of Newmark Group's cash flow, cash from operations, excluding loan originations and sales, had started to recover in 2024 following a significant decline from 2022 to 2023 that occurred from market shifts and economic changes. Operating cash flow changes show commercial facility integration with loan production. Additionally, their investment cash outflows primarily consist of capital expenditures and technological investments. Lastly, financing inflows in 2024 were mainly from new borrowings.
Hi, this is Alania again, and I will be presenting a comparison of the accounting data that our investment analysis team has compiled for Equity Residential and Newmark Group. The slide contains two tables, one that compares the key financials for Equity Residential and Newmark Group, as well as one that compares our selected ratios for these businesses. When looking at our key financials table, we can compare the 2024 values for the total revenues, operating expense, operating incomes, interest expense, GAAP net incomes available to diluted shares, the diluted weighted average of common shares outstanding, quick assets, current assets, current liabilities, and total equities for Equity Residential and Newmark Group. When looking at our selected ratios table, we can compare the 2024 values for the operating margins, operating expense ratios, interest coverage ratios, net profit margins, fully diluted earnings per share, quick ratios, current ratios, debt to asset ratios, and equity ratios for Equity Residential and Newmark Group. The values that we have included in these key financials and selected ratios tables have been crucial to our process of evaluation and in making our comparisons and determinations.
Hello again, it's Mar, and I will be presenting the SWOT analyses for both Equity Residential and Newmark Group. First, we're going to look at the strengths, weaknesses, opportunities, and threats for Equity Residential. Most of their strengths include their scale within coastal markets, stable occupancy rates, and investment balances. With the revenue increasing from $2.87 billion to $2.98 billion within 1 year, their net profit increased from $869 million in 2023 to $1.07 billion in 2024. Equity Residential's weak point falls into their interest rate sensitivity, property taxes, utility costs, and moratoriums. Opportunities that Equity can take advantage of include approaches to optimize and add value to renovation and market selection, which can then promote an increase in their sales revenue year on year. Some industry threats that they may face include interest and insurance rate increases, costs of construction, and development shifts in the urban areas. Moving on to Newmark Group, their strengths include their diverse commercial real estate platform, the scale in which they operate, and their client relationships. The net profit increased from $62.4 million in 2023 to $85.5 million in 2024, with a new profit margin increase of 0.6%. Some of the weaknesses we've observed were their cyclical transaction revenues, pressure on the margins in the event that the market slows down, and time-consuming deals from start to finish. Some industry opportunities include recurring management services, capital market recovery, and the potential for international expansion based on the growth they have exhibited over the 3 years. Newmark faces many industry threats such as credit stress on commercial real estate, demand shift for office spaces, and lower transaction values. We see these shifts through their year-on-year operating expenses and quick ratios.
Hello again, this is John, and I will be presenting our investment analysis team's conclusions. The revenue streams for Equity Residential are entirely dependent on rental income, whereas Newmark Group has revenue streams from more varied sources that include management services, servicing fees, leasing, commissions, and capital markets. Equity Residential and Newmark Group both maintain consistent operating margins, operating expense ratios, and interest coverage ratios. Equity Residential also maintains consistent profit margin ratios and net profit margins, whereas Newmark Group has more volatility in their profit margin ratios and net profit margins. On their balance sheets, Equity Residential and Newmark Group both have quick ratios that are less than 1, while Equity Residential also has a current ratio that is less than 1, and Newmark Group has a current ratio that hovers around 1. These values indicate that Equity Residential and Newmark Group both have low liquidity and that both would have difficulty in meeting their short-term obligations if they needed to liquidate their assets. It should be noted, however, that the quick ratio and current ratio values do appear to remain stable over time for both Equity Residential and Newmark Group. Additionally, Equity Residential maintains a lower debt-to-asset ratio as well as a higher equity ratio than Newmark. Equity Residential has maintained consistent cash flow in their operating activities with declines in their investing activities and improvements in their financing activities. Newmark Group has made cash flow improvements in their operating activities with declines in their investing activities and some volatility in their financing activities. In terms of their net changes in cash and cash equivalents, Equity Residential has experienced yearly increases, while Newmark Group has experienced year-on-year variability.
Hello again, this is Jolie, and I'll be presenting our investment analysis team's recommendations. Our investment analysis team recommends the company Equity Residential as a sound investment opportunity for Groot Analytics because we believe that Equity Residential has greater potential to increase in market value than Newmark Group. For every year that we collected information, Equity Residential had a significantly higher and more stable profit margin than Newmark Group. Equity Residential also maintained a lower debt-to-assets ratio as well as a higher equity ratio than Newmark Group. A lower debt-to-assets ratio and a higher equity ratio means that Equity Residential relies less on borrowing and indicates that it is more financially stable than Newmark Group, which means that it is a less risky investment. Additionally, Equity Residential successfully managed their operations through the COVID-19 pandemic and was able to make a solid financial recovery, which shows that they have a strong business model that can withstand financial and other external difficulties.
Hello again, this is Alania, and I'd like to thank you for participating in our presentation. We look forward to any feedback or questions that you may have. And lastly, I'd like to share with you our source material as a reference if you want any additional information.